Good morning. Good morning. How's everybody doing this morning? We're going to talk about Forever 21 because it looks like they're headed towards bankruptcy for a second time in 5 years. And I know a lot of you that follow or are clients of ours are in the e-commerce space, in the retail space. So this is pretty important to learn more about and know more about, right? But if you're watching this on replay, if you didn't get a chance to catch this live, make sure you put replay in the comments so I can make sure I acknowledge you and answer any questions that you may have. But yes, Forever 21 is literally headed towards filing bankruptcy a second time. They closed 300 stores, I want to say 5 years ago, and they're looking to close 200 more stores before the end of the year. Right? All these locations, every mall that you've ever been in most likely had a Forever 21 in it. We're talking about a lot of these locations are going to be closed and they're going to move on. And I guess, I don't know if they're going to go online, or I know from the article that I read, they're looking for a buyer. And they said that if no buyer is able to be found, they're now going to file bankruptcy. But I don't know. I don't know if you guys had the money. Let's say you had 500 million or however much money to buy Forever 21. Would you buy Forever 21 and add that to your portfolio? Or would you say, you know what, this business isn't really a business that I want to invest in? Let me know in the comments, right? How many of you are in e-commerce or sell clothing? Let me know in the comments as well. As you know, those of you who are in e-commerce or who sell retail, and when I say sell retail, meaning you're buying wholesale from China or Turkey or wherever, and you are now putting your price on that cost and you're selling it, you're reselling it. For those of you who are doing that, you understand how tough that market has been the past couple of years. It's extremely challenging. And before I go into why it's been challenging, I want you to tell me in the comments why you think everything has started becoming challenging in the past couple of years. Because I have my different theories. I've talked to clients about it, and we've come up with a lot of conclusions, right? One of the biggest conclusions is the competitors that have come into the space, right? You have Temu, you have Shein, you have Amazon. On my Explore page, at any moment, I can go on Instagram, my Explore page, and I can see women modeling clothing for Amazon, and they'll have a link, and you can now buy the clothing from that link. And you can't tell me that that's not cutting into Forever 21's money, smaller retailers' money, right? This is a big deal. So what can Forever 21 do to pivot? What can they do to stay in business and to continue to move forward? Because there's a lot of competition coming into play now. We're not even talking about Fashion Nova. We're not talking about all the other retailers that are selling. There's so much competition at that price point. And for the ladies, you guys know, you have a lot more options of where to shop and where to buy clothes from. For those of you who've ever shopped at Forever 21, let me know, like, how's their quality? What did you think? Have you been shopping? Have you been there recently? Or have you moved on from Forever 21? Let me know as well. But yeah, it's definitely a challenging time. And let me actually pull up the article, because I definitely want to dive into that a little bit. And I want to share my screen so we can go through it. But yeah, this is a big deal. All right. So here's an article from Wood TV, and it talks about how Forever 21 may close the remaining stores as a second bankruptcy looms. And Wall Street Journal reported on it. But at its height, Forever 21 had 800 locations worldwide. 800, y'all. That's a lot of locations. And then after the first bankruptcy filing in 2019, the number plummeted to 500 locations, like I was saying earlier. And then the company, like I was saying earlier, is reportedly seeking a buyer for its remaining stores. But if no one is found, then they're going to liquidate its entire 350 store chain. And according to the Financial Post, the potentially closing stores had been losing money for years. So I want y'all to like, this is a huge deal, right? Because there's people, there's clients, there's even myself. There's been times where we've been in the space to where we're losing money every single day, every single week, every single month. Your business is bleeding, and a decision has to be made. Do you continue the bleeding? Do you figure out how to fix that leak? Or do you say, you know what, let's shut this thing down? Let's file bankruptcy. Let's sell the business. These are hard decisions that everyone has to make. At some point, you may have to be faced with that, right? And Forever 21 is in that situation right now. And then it says Forever 21's trademark and IP are owned by a brand management company, Authentic Brands. And 5 months after Forever 21 filed for bankruptcy, a joint venture between Authentic Brands and mall operators Simon Property Group bought Forever 21 out of bankruptcy, preventing potential liquidation. So they were saved the very first time they were in bankruptcy, or like they had, you know, someone come in at the last minute and say, hey, let's do this deal to keep this brand going. But obviously, that's not enough. Obviously, we see that even though you might have someone come in and plug that leak in your business, what is the real issue that's causing all of this? And how do you solve that? And they haven't been able to solve it. And I think, like everybody else that was in retail, they most likely had some really good years in 2020 and 2021 when you had stimulus checks being pumped into the government. You had EIDL money, you had PPP money. Even in California, you had the EDD, the unemployment. So there's money being pumped in, and that inflated a lot of sales. I know Forever 21 was a beneficiary of that. But now that all that money has dried up, now, if you think about it, back then, employers, people who were looking to hire were saying, we can't find anybody to work because no one is applying for the jobs. Now, those same people that weren't applying for the jobs are now in the job market looking for opportunity, but there's not enough jobs for everybody that's looking. And then now, like I said, you don't have all the money that's been pumped in. So people are hurting for money. And how do you stay in business when you have other competitors such as Amazon, such as Shein, such as Temu, that you have to compete against, who are most likely probably cheaper? And on top of that, I don't have to go into the store to shop with them. I can go online and buy those clothes and it come directly to my doorstep. Another thing too to think about is that one of the reasons why Forever 21 is struggling is because they have brick and mortar locations. So when you have brick and mortar location and you're paying this rent on top of losing money, that just adds on to the bleeding. It adds on to everything that's going on, because at least if they didn't have that rent that they had to pay, and their rent is not $2,000 a month, we're talking probably 15, 20 grand a month for all these different locations. And on top of the labor that you have to pay for to come in and work, the inventory that you have to pay for, the marketing, you have to make enough money to break even. And if you're not selling enough, you're not even able to break even. So now the money is bleeding in your business. Now you have to go look for loans. You have to go look for investors. You have to go look for additional money to keep this thing going. So this is where decisions have to be made. This is where, you know, does it make sense to shut down? Does it make sense to just say, you know what, let's call it quits and let's go out of business? Amazon, once again, has found ways. You know, they're very crafty at how they're able to come at certain industries and say, you know what, I like that industry. I want to get in that industry, and we can, because we have all this money, all this capital, all these cash reserves, and y'all know that's my favorite thing to talk about. Because we have all these reserves, we have enough money to go do research and development and figure out how to get into these spaces and then cut them out and now take over that space. So now Amazon is a major player in the retail space. Let me see if there's any comments. We see Shoe Limitless. How are you doing? You said moved on because it's more so for a younger audience. Wow. So you said you moved on. When you say moved on, are you saying yourself or Forever 21? Let me know in the comments about that. Jima Emmanuel says brick and mortar stores are dead if they don't change their business models. Unfortunately, we're seeing that. We're definitely seeing that. Cedric, what's going on? He said, if you're in massive debt, there is no solving it. Game over. That's huge. If you're in massive debt, think about this, right? Cedric just dropped a bomb, right? If you're in massive debt, how can you save that? The only real ways to save that is to find an investor. And if you find an investor, do they want to invest in your business? If it's not worth a lot because you have this mounting debt that's pretty much about to put you out of business. So if you find an investor, is that going to be enough? And the bigger issue is, what is the problem that's causing you to take on all this debt? And can you fix it? And if you can't fix it, then you have to make that decision of, you know what, we might need to file bankruptcy. And you know, we've seen people file bankruptcy before. That's not the end of the world, because you can always come back. You can always restart your business a different way. You know, but this conversation is really about, how can we avoid that if possible? How can we see these things happening and potentially avoid these things from happening? How can we be proactive about these type of situations? Right. But Cedric did drop a bomb. He said, if you're in massive debt, right, we're not talking about $2,000, $3,000 worth of debt. We're talking about millions of dollars of debt. If you're in massive debt, there may not be anything that can be done to solve your situation. So it might make sense to say, you know what, let's file bankruptcy. Let's end this thing and come back strong. Great comment. Jima also said, there are a lot of competitors. Their mind share is so negligible. I agree. And Shoe Limitless came back and said, yes, for myself. Okay. So you said earlier you moved on because it's more so for a younger audience. And that's a great point, right? Forever 21, did they tap into younger people to help them to be able to sell their product? Are they on top of the styles, the fashion, on what they need to sell, right? Because if you're not on top of that, before you know it, you might have started your business in retail and you were 30 years old. And before you look up, you're 40. And you may not be on top of the different styles that all the younger people who are shopping with you now are looking to dress like, right? So when you think about that, as you're aging, as you're getting older, is your demographic getting younger? Is it your demographic around your age? Are they following you? You have to now change how you dress, right? Because obviously, as we get older, our dressing and our style changes. So these are all things that it makes sense. It makes sense. I read something that said that Forever 21 also had like a deal, a joint venture or some kind of deal with Shein, right? I think where they were selling Shein clothing in their stores. I don't necessarily know if that was the greatest idea. I mean, it looks like it didn't really help. And it looks like Shein actually, I was smart on their behalf because that's marketing for them, right? If you go into the store at Forever 21, you're looking to find clothing that's for Forever 21, and you're seeing Shein's clothing in there. You've already seen them everywhere else. You've seen them online. You've seen them all over the place. Now it's like, wait a minute. This is free marketing for me to be able to buy your product. Now I don't necessarily have to go to your website. I can go into the store and buy that. So it's interesting how, I don't know what they were thinking when they did that. Did they think that that was going to potentially help them? I'm not for sure. But this is good. I think this is a learning lesson for all of us who are in business, specifically retail. You know, whenever you see the bigger giants going through things, what are the things that they did to be great at what they're doing, and what are the bad things that they've done, and how do you circumvent that? How do you not fall into that same place? How do you avoid the trappings that they've fallen into? Were they too aggressive with their growth? Did they make some decisions that they struck out on? And was it too many decisions that they struck out on? Right? Like, all these things are important. It's important to really think about and to figure out. But I think there's a lot that can be learned from the bigger companies, because we don't necessarily always have to figure it out on our own and go through things on our own. We can see what other people have gone through and learn from that. But yeah, I just wanted to come on, y'all, to talk about Forever 21. It's unfortunate to see them going out of business potentially. It's their second bankruptcy that they're looking to go into. They're going to close 200 stores, most likely before the end of the year. We're not even talking about what that's going to do for the malls, right? If you've gone to the mall recently, um, I know the Galleria here in Houston, they've done a great job of figuring out how to mask all the different, I guess, open spaces in there in the mall, right? Like I know I went there recently, and if y'all know the mall in Houston, Galleria, Louis Vuitton used to have one location. Now they have a second one. They have 2 locations in the mall. And I'm pretty sure that they got the second one at a really good deal because the mall needed to figure out how can we find someone to move into this big space. And Louis Vuitton has the margins. They have the money to be able to say, you know what, we can absorb this second space and probably roll out a different concept in that location. And then you walk a few meters down the hall and then you come to the second location, right? So the malls have to figure out how are we going to fill up all this open space that we have in the malls, right? Because a lot of retail is being impacted by the Amazons. They're being impacted by e-commerce. They're being impacted by the convenience of literally just logging onto your phone and saying, I'm going to buy whatever it is that I want in the comfort of my bed, in the comfort of my home, without having to get up, go figure out how to park, right? Like I got to struggle for parking at the mall. I got to deal with all the people in the mall. I can just conveniently, if I know my sizes, go on my phone and make an order. And then if it doesn't fit, I can return it. Amazon makes it very easy for you to return anything and redo it and get the right size back, right? So this is where everything is going. And as retailers, we have to figure out how can we circumvent that and how can we get ahead of the pack, right? So I appreciate y'all for coming on. Definitely, if you haven't, subscribe, comment, like on YouTube. I'm at E from CPA. And, you know, I definitely will be on later on this week. And we'll talk about some more things, man. We're going to get into some deeper waters around all this business stuff and how we can learn from everything that's going on in the economy. I appreciate y'all for tuning in. Until next time.